Welcome, guys, to Kels and Betzy show, where we are focused on raising private capital and investing with purpose. So, whether you are a new investor or an experienced investor, or even looking to buy a business, understanding the art of raising private capital is crucial in today's competitive landscape. Join us as we navigate the complex realm of attracting investors, securing funding, and building meaningful relationships that fuel your business growth. Welcome, guys. I am your host, Kalisha, and I have my co-host, Betzy, with us today. And I mean, like, we're recovering from the storm here in Florida, but I think it was okay.
Yeah. No
Some,
major troubles.
no, I think like some places south of Tampa, St. Pete, a lot of those places got flooded. Um, but I think there should be fine now. I think they're said to wait until like tomorrow for everything to like freeze off a little bit. But it's pretty good over here in Florida. How's it in
Is it
Georgia?
is it affecting you anywhere? Well, here it's been raining like since Monday. Like really bad storms, trees on the ground, like always. I mean, there's always trees on the ground over here when there's a storm.
Yeah.
But yeah, nothing out of the ordinary. We did have like an advisory. But I mean, we're all doing our thing still. So lots of cars on the road. And it was scary. I think on Sunday it just started raining out of nowhere. And on our way home, there was like this tree falling on the like, but it wasn't like a whole tree. It was just like a small tree. And we were just like, oh my god, we gotta evade it. But we had just gotten the tire, so we just were like, we're prepared.
Yeah. I think they said that Georgia is about to hit it to get it, but not as much.
Yeah.
We'll see. So if you guys are like by the time you see this, I hope that everyone is safe.
Yes.
There were no major damages or anything like that.
That's so
But
good.
right today we have a good friend of ours. He's kind of acquiring or growing his portfolio in a very unique way. And when I say unique, he is using fund. He's also raising capital, but I also want to pick his brain because fun, because selfish me, I'm doing a fund too. So I always like to figure out how are people really doing things, how they structuring it, what hiccups they went through, but most importantly is how are they using private capital to scale in their business. And the crazy thing is he's in California, but he's doing projects outside of California. So we're gonna learn about how he's doing that, how he's using private money to do that, and we're gonna just go into the nitty gritty. But before we even do, Betsy, you want to hit them with that disclaimer?
Yes. The following information is for educational purposes only. Please do your own due diligence. We do not provide financial, legal, or professional advice.
Mhm. So, guys, everything that we're gonna say is really just our experience. Our guests is just their experience. It's what they've been through. So, without further ado, let's welcome our guest. He's a fund. I would consider him a fund manager because he is a fund. He's a capital raiser. He's an expert investor, real estate investor, whatever you want to call it. He's wearing all the hats, running his business. Let's welcome Joe Ramos to our show.
What's up, guys? Thanks for having me.
Welcome, Joe, to our show. We're very excited that you came and joined us a little bit on this beautiful day. For me,
Yeah,
it's sunny.
yeah, I appreciate it. And yeah, after this, I'll be jumping in the pool. It's nice and sunny out here in California, so stoked on that. But yeah, it's funny you talk about like the storms out there in Georgia and in Florida because I have properties in both areas. So I'm sure we'll get into that too.
Oh yeah.
Oh goodness. Excited to get into that because that's a whole side of investing, right? You have to make sure your insurance is in place and that it covers you.
Yeah.
Yeah.
Joe, so let's dive right in.
Mhm.
Give us, for those who don't know who you are, just give us a little bit of background, how you got into real estate. What is your main strategy right now in real estate?
Yeah, so thank you again for having me. Joe Ramos here in California. So Basically, the way I got started was quite a while back. I used to work in the car business and I bought my first house when I was 21. And I guess people call it now the house hacking type of thing. So I bought a house and I rented out a couple rooms to some friends that I was living with because I was tired of paying the landlord. And, then since then, I just kind of got addicted to buying houses. So I tried to figure out every which way to keep the ball rolling. And so I'll keep it short and sweet, but I just, kind of bought a house every couple of years. And then I, would rent them out and then I'd move into the next one. And my dad taught me a lot of how to fix things up. So we did a lot of the renos ourselves and stuff. And that just kind of like helped me, amass some rental properties to kind of help me make extra money. And I just kept on saving that until I was able to get out of, working a job. But I was in the car business for about 14 years or so, and I moved my way up and just used that to kind of help catapult me into where I'm at now. So I guess skipping forward to that, the way I really got into raising private capital was when I started investing in Georgia. I my best friend moved out there, and then his dad ended up moving out that way. And my friend told him maybe you should start investing with Joe, and so that was kind of like my first like in with that. So we actually created a partnership, and he ended up investing some of his money with me, and we bought a couple houses. So we've got 3 long-term rentals there, and then my other business partner, who I actually do the fund and the Land Shark podcast with, he and I have 2 multifamilies in Ohio, and those ones I've actually haven't even seen to this day. Those ones were kind of our own money, but with the fund that we started, hopping into that because I know everyone's curious. So the fund, we actually have 2 short-term rental properties in Florida, one in St. Petersburg and one in Gainesville, Florida. So luckily they didn't really get too affected by the hurricanes. We did have a cancellation, but other than that, we were pretty unscathed. So that's good. Glad everyone's okay. And so that's a 506B, and that one is for non-accredited investors, mainly like, people in our circle you can't advertise. So we just had a lot of people because he's from Idaho, I'm from California. And as we know, those markets just kept on taking off and taking off. So we had a lot of people who had 10, 30, 40, 50, 60 grand that they wanted to kind of invest. They kept on asking us questions because they obviously see what I do, and that I became financially free through real estate. So that's why we ended up doing the fund, just because we had a lot of different people that wanted to invest. And so we figured that would be like the easiest route to do that. And our goal is to do the short-term rentals because then we can actually pay higher returns than a long-term. I would say it would probably work really well with multifamily also. It's just not what we were focusing on at the time. We wanted to be in the Florida market because we saw that as something that was going to keep on going up and appreciating. So after the 5-year fund, we have a decent amount of equity in these properties. So also, I am doing some flips on the side as well and raising private capital with that. So got a couple flips going on in Georgia and one in Florida right now, and looking to acquire another one in Florida. So we actually just had one in Atlanta right there go live today. So I'm super stoked, and I was like really happy about that one. It turned out great. I don't know if you saw some of the pictures on the Facebook group, but I got to be a little bit more diligent, put some more up there. So
is that the one that had like the 2-story? It's kind of on a hill.
Yeah, that's the one I did with the Delaney's. So they actually put in all the money, and then I got the team together, and I actually flew out there a couple times to work on it and get the ball rolling, because I had the 2 properties that were pretty close by. The other one that I'm flipping in East Point, Atlanta, I actually my next door neighbors invested with me, as well as my friend's dad. I was talking about. He decided he wanted to be more of a kind of a passive investor now, so he actually invested in our fund also. And so I think that's one thing I would just reiterate to people is like, you never really know like the power of this raising private capital, because once, somebody sees what you're doing over on this side, then they're, more willing to kind of keep on going with you and really invest in you. And then also get other people that, want to invest with you because they see what you've done for them. So,
Tell us
um,
tell us more about that house, like that project where you had the neighbor. Like you mentioned it was a fix and flip, but what was the cost? How did you structure it with those two lenders? Was there any form of money out of your pocket, and what were the terms and the documents that you used?
Okay, so yeah, that one I'm still working on. The way that one kind of came about was I was going to get hard money for it. I fell into this deal with the wholesaler because they know that I'm in that area. I did my numbers over and over again, and it just made too much sense. So I was like, okay, I'm gonna go for this one. So on that, I actually went next door to my neighbors and I took my laptop over there. They've actually been to one of my properties. That's an Airbnb here in California that's up in the mountains. And so they know what I do. They obviously see me and everything like that. So I just went over there and kind of showed them. I did like a presentation just in front of them and just showed them the properties that I've bought, what I've done with them, and what they look like after I've been done. And just said, hey, I'm about to pay, a hard money lender 10%. I just figured, I know you guys said you had some money come from, your family. Maybe if you wanted to invest, I have this one right here. I was actually thinking they were going to invest in the fund, to be honest with you, because they're older,
Yeah.
and they saw this one here in East Point, Georgia, and said, "Oh, okay." I told them I needed 180,000, but I could probably do it with 150. And so that kind of piqued their ears. And so they said, oh, we might be able to do that. And I said, oh, wow. Okay. So, went back over to my house, and I swear 10 minutes later, the husband came over and said, okay, we're game. So, um, yeah, so I had already kind of talked to my friend's dad about it beforehand.
Yeah.
And then I had mentioned to him, like, well, I actually got 150 from my neighbor. I only need, if you want to just throw in 50, because the price of the house is 183,000 is what I ended up getting it for. And so I got 150 and then another 50. And I basically had just been using some of the extra money to kind of pay for certain things. But then I have my business credit cards that I'll put like whatever I can on those, because they're 0% for 12 to 15 months, depending on the card. So I've got really good credit, and that's kind of helped with some things. Plus, I get some points. The last time I flew out to Georgia, I paid, I think it was like $22.50 for my wife and I to fly out there, just
Oh wow.
because I had all these points. So that's another advantage, I guess, to throw in there. So this house is probably going to take about $100,000 of rehab. It's kind of gone up. I was originally thinking about 75, but we want to make it really nice because I guess this area that I bought in ended up being a really good neighborhood. So when they're done really nice, people tend to pay a lot more for them. So and we're actually, I mean, this place is really cool. I'd love to like show it on here, but it's 3 levels, and it's about, I'd have to say, almost 3,000 square feet. And it's on a double lot. So it's just really kind of unique. It's a cool little house. It's got 2 pillars in the front. We actually took out this shaded area that looked really horrible. It has 2 pillars. We're going to be putting a railing around and actually moving the front door over where one of the windows is, to change the staircase, because the staircase, you stare at it right when you walk in, and it's too tall. So we'll be able to add that square footage up there once we fix the staircase, and it'll actually make the flow into house a lot better. So you'll be walking into the living room. We took out a wall in the dining area to kind of really open up the kitchen, and we have 16 feet of counter space going down the side, with another 8-foot counter at the end that I'm going to keep open for like a spot where you could do your podcast, or a little laptop area with a nice big window that overlooks the backyard, right? So I'm here selling it to you, but so I'm really excited for this one to get done. It's going to have a huge master suite upstairs, and it's got 2 his and hers closet. It's going to have double shower heads, like a 5 by 5 foot shower. So it's going to turn out really good. And hopefully we'll try and get like 4.5 for it. Maybe we'll get closer to 5. I don't know. But, that one's been kind of a pain in the butt. So not that everything's sunshine and rainbows, but that city has been a pain in my rear. And so that's, a challenge that has come up with that one. But like I said, the good thing is that the areas where it's at, I'm actually going to probably get 100,000 more than I was originally thinking. So, you have to go through some of these pains to get these gains, right?
How long
Um,
did you expect this project to be?
what's that?
How long did you expect this project to be?
I was thinking I'd get it done in under 6 months, to be honest with you. And that's the thing is we probably could finish it up pretty quickly if
Yeah.
we didn't have to deal with some of the inspections from the city. Because I've had it 4 months, I kind of had to put a pause on it. And, which allowed me to finish that other one up faster. So that's nice because that other one's out of the way. Now my guys can focus on this one. And then I'll eventually fly back out there and probably take my dad with me because we really do enjoy working on these things, and especially like an older craftsman style house. My dad's master craftsman when it comes to woodworking and everything, and he's got a really good eye. And I think it'd be important to make sure that this place really stands out because, like I said, it's very interesting in that area. And Betzy, I don't know, you might know since you are in Georgia that some of these areas that if you spend the extra money, it'll really go a long way. And so now that I'm kind of going to be spending more than I thought and taking more time, I might as well, try and get the most out of it. But the good thing is my private money lenders are happy and okay with it going longer. It was funny. They even told me, oh no, keep it for as long as you want.
I was going to ask you too, like if the project is over 6 months and it went over, like how did you handle that communication with the lender?
Yeah.
Like,
So I'm not over the 6 month mark yet, which is good. But when it comes time, if I don't finish by that time, our agreement is they're going to be getting the additional because we agreed upon 10%. And they're going to be getting an additional, annualized 10% every month that I keep it. So it sucks for me that it's going to be costing me extra, but again, want to get it done right and try and make it look the best we can so I can recoup some of the extra costs that I've incurred. Now with the other private money lender, like I said, my business partner on some of the other properties that we have long-term wise, I'm giving him 15% because he had, allowed me to use some of his tools that he has out there. He spent some of his time going down to the city and, but he doesn't want to be working on it physically, which I'm totally okay with. So, just trying to make sure you structure everything fair for each person that you're involved with. And, that's why I don't like to involve usually more than two lenders in one deal. Usually like to do one and just erase it all with one. So that way it's not too convoluted, right?
which leads me to my next question. It's how are you with so many different projects going on and different private money lenders? How are you managing the communication with these lenders and keeping track of when this payment should be paid?
Well, trying to get it done as fast as possible. So that way, we just get paid at the end. So like the one that I just finished, we have only had that house 4 months and it already got listed, I think 4 months and a week. And so that'll be nice and clean and easy. I guess I'm just pretty good at keeping track of things, really, and I try not to spread myself too thin. The good thing about the fund is that the fund kind of runs on its own in a sense. So I don't have to worry about those ones so much as I do on the fix and flips, right? And then on one of the other fix and flips that I have in Florida, my business partner is kind of taking care of that one. And we did hard money on that with and then the remainder with our student, actually, because we actually have a coaching program as well, and he wanted to learn and get involved and invest with us. So we're doing that one a little bit different way, but I guess just finding the right people to work with, partner up with helps. But again, I'm a control freak, so that's why certain things I like to take care of myself, right?
With all of these, have you had any form of hurdles, like or challenges that you had to overcome with private money lenders? Like any objections when you pitch a deal, or any pushback?
Yeah. So if you're talking about when it comes to the project or the people.
I would say the people, whoever is lending you the money. Like, let's say you presented any form of deal, whether it's a current deal that you have. Is there any pushback where they're like, Joe, I want more money. Or when after they funded, they're like, I need my money back or want to change the terms or anything like that?
So I would say the biggest things I've had is maybe people wanting to be too involved in the project itself. That's kind of where I'd like to draw the line, because you have to trust me on what I know how to do, right? So that would be one of the things. As far as the money aspect, I think we try and get that out of the way from the get go, so that we don't have any of those issues at all. There's something else though that I wanted to bring up. I guess like I was talking to somebody yesterday who was asking for some advice on a creative deal and private money lending. I think the thing is to try and think of it um, like your end, like if you were a private money lender, what would you want? And then also thinking about before you talk to them, like what the pain points are and what exactly like they're looking for. Like I know some people, they usually like to do the shorter terms more so than the longer terms. So I tell you that the with the fund, it was actually a lot more difficult to get people to invest for a longer time. So when it came down to, and we had all these people who were like soft commitments up to like 300,000 or something, it dwindled down and dwindled down, because again, these are the same people that were afraid to take action. It wasn't even about the numbers. I mean, like we've even told people, like my cousin was one of them, for example, not to put them out, but it's like, how long have you had that 30 grand just sitting in the bank? It's like,
Yeah.
so
Yeah, I've
I
had a conversation before.
but I like what Amy was talking about, how we're not trying to sell them on it. It's
Mhm.
it works for everybody, right? Okay, like I'm gonna make money, but this is because I know what I'm doing, because I've done this already for myself, right? So I bought those 3 properties in Georgia, bought them cash, redid them, refinanced them, got the money back, did another one, did another one, did another one. All right, we got proof of concept just right there, just on those 3. And then, done the same thing in another state, in Ohio, that duplex that, that same kind of scenario, bought it from a wholesaler, fixed it up, paid cash for it, refinanced it, and then rented it out. And it's really the same concept, because you could do that same thing with a private money lender. It doesn't have to be a flip, right? And that's what I think people don't realize sometimes. And I always like to stress on the deal, making sure to get the right deal and not just any kind of deal. That's one thing that I notice sometimes, like on our weekly calls, when people are asking questions and talking about what they're trying to do, and everybody wants to start, like at 100 instead of starting at the beginning and kind of learning the ropes. So I think when it comes to the raising of the private capital, it's not always as easy as you think, because sometimes, for me, I mean, it's like a no-brainer, right? But then again, I have to realize, and like I've talked to my wife about this, that not everybody really, they don't know what you know, and they don't have the level of I guess knowledge. Like they don't realize like how powerful real estate is, and what you can do with it, and how you can set up your lower risk factors, right?
So that's why they always said, like, you should always, I mean, Amy has said it multiple times, always be raising money,
Yeah.
because you can know someone who has 50. And instead of going to them the first time you have a project, why not just nurture that relationship and start educating them about it? Because by the time when you really, really need that 50, they're that same lender that's gonna come through, because they're at a level where they understand what they're getting themselves into. They understand the opportunity, the risk, and everything. And then when they start doing it, they start learning more.
Yeah.
They have more questions and not a bunch of hypothetical questions. And I find as capital raisers ourselves, I mean, your wife is right, because we will start be explaining things thinking we're talking to a real estate investor.
Yeah.
But it's not. Like sometimes after a phone call, I'm like, Felicia, what did you just do? Like this person has no clue about investing.
Yeah.
So you now have to pivot. Like, how do I have these
Yeah.
conversations? How do I
Now,
position it for them to understand?
it's crazy for me right now, since I've been getting into like the Hispanic community and trying to like be more educational about real estate. It's been crazy because I have to actually like translate everything I know into Spanish, and just those little small words like, hey, like I have to break it down for myself so that I can be able to break it down for them. So it's cool that you mentioned that. I've been seeing that myself. Joe,
So
it's so easy to see you. Like I can see how you raise capital. You got us excited about your property that you're doing here in Atlanta. I want to see it now. I'm just like, oh, that is so cool. I can totally go. I know the area. But tell us a little bit about the first time you raised capital. Like, how was that? I mean, I know you know so much more now, but what was it the first time that you raised capital?
Well, I think what was fortunate for me that I didn't really realize until I got into this group that we're in, speaking about Amy Majuri's group, is that I actually had a lot of experience already doing it for myself. So the proof of concept was so much easier, I think, for me than maybe it can be with some others, is because I had already had, you know, I don't know, 5 or 6 properties or something like that on my own, before I ended up raising capital. So when it came time, it almost like the first person, I didn't. It was just like a no brainer. I'm like, okay, I'm gonna be doing this deal right here. Do you want half? Like, I mean, it was like, and the numbers just made so much sense because I mean, I would have done it no matter what, but it would have been, you know, an extra what 50,000 or whatever out of my own pocket. But in this case, I gave up part of it to, to therefore now have someone who's invested on, I think, like 6 of my, projects following that, so giving up a little bit to gain a lot more sometimes can really stand out. And that's one thing that I did with the other project in Atlanta with, the Delaney's in our group. I mean, I'm giving them half, like we're doing a partnership in the sense, even though they're not doing any of the work, but they are, putting in all the money. So I gave up more than a lot of people would think, but looking toward the long run, I mean, they already want to do another deal with me. They already have other people that they could get involved to now. Maybe they don't even have to bring in their own money either. And now we can just start this huge organism,
Yeah. Was
right?
that like a mindset shift for you? Were you like, oh, I have to like, or were you just like, yes, let's do it, let's go like that? Were you already thinking long term?
Well, it was at the first time I did it because, the reason I did all these ones by myself beforehand is not because I was greedy. It was just because I was kind of afraid of someone messing things up, and so and so that's kind of why, like, for the longest time I was really against doing partnerships. But then once I got into, a partnership here, then I got into a partnership here, and then I got, and so, and it helped grow faster because, going from, that point of when I had, I don't know, I think it was like 5 or 6 of my own now to like 22, you know what I mean? And then to having a couple more flip projects, like going on to that. So, 25 currently, so it just really, I guess it is a mind shift change, because, it's hard to not that you're greedy, but it's hard to share sometimes. So, but if you can, shift and look at the bigger picture, then and I'm confident in myself because I wouldn't be doing these deals with other people's money if it wasn't just the way I would treat my own. So that's why it doesn't scare me or bother me, because I do these deals to where I have multiple exit strategies. So even if I, couldn't sell it and flip it, well, I know the market well enough to I can refinance it, pay my lenders back, keep the property, and rent it out. Because like the one we just listed, it's got 2 levels, so you can rent out the bottom floor as a, short-term rental or a traveling nurse, and then rent out the top, and and make some money and still have a free house at the end because you've paid back your private money lenders. And so just making sure that you're really diligent on doing things like that. Then it
never had a case where you were like late on payments?
Not yet, knock on wood. You know?
Oh,
But I'll tell you what, that other house that I'm talking about in East Point that's taking a little bit longer because of the city,
yeah.
that probably be the first one. But what's great about that too is that, when you setting up everything in the get-go, just letting people know that it's not always that timeline, and for them to say, "Oh, that's fine if you need to keep it longer, we'll take the extra money." Really, you know, it doesn't bother me. But then when it comes time, who knows? They could turn around and say, "Oh my gosh, we need the money," and whatnot. And so we'll deal with that when it gets there. I'm not going to let that stress me out because I've already got enough things to deal with the city. So just trying to make sure that I push on and keep going forth and trying to pressure those people to, make sure I get things done in time, is where I'm at on that one right now.
Have
So
you ever used funds from the fund to fund? Oh my God. Okay. Have you ever used money from the fund to fund a fix and flip project?
No, because the way that we structured it and the way that we told our investors what we're doing is for short-term rentals.
Mm.
So that is a good thing you brought that up, because it's something we might pivot to doing. Actually, we might pivot to doing, like, since the fund is a long term, we might pivot to doing some pad splits in that, which can kind of be similar to an Airbnb anyways. All we have to do is we have to send out a letter letting our investors know, hey, are you fine with this? Like, houses that we, the next, property we buy is going to be this kind of house. It's going to generate this. And we'll make sure that it makes, obviously, as much money as we need to be able to pay our investors. Right. So no, we haven't done for fix and flip. So we're thinking about possibly starting something to do that for fix and flips. But
Is there anything like from the fund? Because I know this is something that can be done. When you have the fund, you have a portion of it that you set aside for special projects, and you can use that amount. Let's say it's 10,000, and you can use that amount and fund other projects. So it's a way for the fund to make additional money.
Have I heard of that? I have not. I mean, I could, I'd have to read through, like, our, we hired lawyers and everything. I mean, it costs a lot of money to do a fund. So when you're saying that you wanted to do one, I'd really do some due diligence and try and make sure that you've got, a good amount of money, because it costs about 20,000 or so to start, a legit fund. And I mean, because it's got a holding company in Wyoming and then a management company that manages the properties, and then each property has its own LLC. So it's a pretty, intricate structure and stuff. But no, it's a good question, and I think I might have heard something like that in there. But we're just trying to keep things simple and just, all right, these are the houses that we're going after. We know that if we buy them under value, fix them and set them up and stage them as an Airbnb, then we're gonna cash flow enough to pay the investors throughout the fund. And then once the fund, is over and we sell the property or refinance it, well, we've got 5 years to build equity. One of the ones that we got in Gainesville, that one we bought for 260, it's already worth 400, and we really didn't spend a lot of rehab money on that house. I mean, we spent maybe 15,000 or less on the rehab, and then the furniture for staging it as a short-term rental. And so we're actually offering that one up if somebody wants to buy a short-term rental running, because we're thinking about transitioning that money, since we have a good amount already, and taking it and buying 2 more houses, and like I said, setting them up as pad splits. So that's there's always different ways you can pivot if you want to. And that's why I said, like, that's why I was looking that up the other day to find out what we would need to do if we did change what our buying parameters were going to be. And so all we have to do is just notify our current investors in there and say, hey, are you cool with this? This is what it looks like. And I don't think anyone would argue, especially with what we've done, to go and buy 2 houses from one that we've already bought. And we've only had it, I don't even think, a year. So not too bad, right?
Not too bad. But I'm definitely learning a lot when it comes onto the fund. And as you said, it can get really expensive. But I think the good thing, the approach that we took is, because we're part of Block Card, so we just pay one money, and then it includes like all the coaching, someone to create the pitch deck, coaches, and it also includes legal.
Nice. Yeah,
So
I would say do a 506c next time. That's one thing that we would probably do different, is
yeah,
because then you can legally advertise. And
yeah.
my business partner is really good at that. And so it's kind of a bummer, because that's a fine line. We can't advertise.
Mhm.
And so that's one thing I would do differently. next time. We just thought we had enough people that were thinking about putting some money together, and so we'll kind of create proof of concept in that. But the good thing is we could still raise money for it, and we still currently are working on raising money for it. So it's not dead, which is nice. But definitely next time will be a 506C. So
No, for sure. Like that's the one that we're doing as well. But
cool.
like right before we wrap up, like what advice would you give to anyone who is thinking of doing what you're doing, and then even considering using other people's money to fund their project? Anything.
Or
Yeah.
virtually. A lot of
Yeah.
the work you do is virtual.
Yeah. I mean, yeah, how I'm doing it from other places. Oh, I would say finding the right team
Yeah.
is the biggest thing. I mean, honestly, like I manage the Airbnbs from, over here, because I've got great cleaner and great handy person on each of the properties. And then the same thing with, with the fix and flip properties, or even the, long-term rental properties, is having, the right people to work for you. I mean, I'll tell you this story real quick. My lady in Ohio, shout out to Faith Jadlot. She drove all the way down to Ohio to kind of help me out with those projects out there when I took off. So that was really cool, and that was the first time I actually ever met her. And I still haven't seen both of those properties in Ohio, but she's just so awesome and so worth it that I paid for her to go down there and help out with those projects. So really finding the right people is key, because especially when you're doing it from far away, because you don't know what's going on if they don't tell you, and you need someone else's eyes. So otherwise things can just go downhill really quickly. And so that's a really, really key factor. And then for people who are getting into it too, I would say just analyze the deals as if it was your own money, really. And I know that's tough for some people when they haven't bought one themselves, and that's why I think people can take a step back and try and do something for yourself first and kind of show proof of concept. But if you can't, and you can get someone else to help you buy a property, maybe a personal one, but figure out a way to refinance them out and keep it for yourself. And now you're already getting the ball rolling on raising private capital for other deals.
Yeah.
It's
No.
amazing. So Joe, tell us, if anybody wants to reach out to you, how is the best way to do that?
Well, let's see. I'm SoCal Traveler on Instagram and YouTube, and then we have a Lock and Key Capital IG, and we have a Land Shark podcast. So if you look us up on Land Shark's Financial Freedom podcast on Spotify or Apple or wherever you listen to your podcasts, we're on there too, and that's on Instagram as well. So yeah, I'd be happy to get you guys my information if you want to put it on there. We also have a website that's jsjrconsult.com, and that will have all of the information about me as well. So
We'll definitely drop that in the description. And guys, let us know what you think about this episode as well. If you have questions, feel free to drop them in the comments. If you're listening to it on any podcast platform as well, let us know as well, because you can comment there, leave us a review, and just let us know what you think. Joe, thank you so much for being on our show. We appreciate it. You sharing your time, your knowledge, just what you're doing and your journey and how you're raising private capital. So yeah, thank you for this was good. Betzy, you want to take us out?
Yes, I also wanted to say thank you. I really appreciate you. It was awesome getting to know you, talk to you a little bit. I'm really, really looking forward for people to watch you, know you, and just get some of those awesome golden nuggets. So whether you're looking to finance your next project, launch, or expand a new business, we hope that this episode gave you insights, strategies, and tips so you guys can raise capital and invest with purpose.
Bye, guys.